hopefully a grand finale to a wonderful conference, which is around 2 full days. With me, I have some very enterprising, accomplished founders who are on their second journeys, third journeys, but also tackling this very interesting area of insurtech, as it's broadly called. And the amount of diversity on this panel is quite staggering. Without much ado, I'll leave each of the panelists, Ugur, Sam, Kai, and Igor, to describe who they are, from what they're building, which part of the world, and then I'll have a bunch of questions which I would love for them to answer for the audience.
Yeah, thanks. Hello, everybody. So I am Ugur, CEO and founder of Medigo. We are based in Berlin, Germany. We have two main business lines. One of them is we manage claims, healthcare claims for big insurance companies, mainly for their international patients. And we basically check the invoices, make sure that they pay enough, they are not overcharged, and also make sure that the claims are paid on time, etc. And we also launched our own insurance product as well. It's a critical illness insurance product which covers the members for cancer, heart surgeries, neurosurgeries, and transplants. So things that can kill you, things that actually can also break the bank. It covers the member globally in any hospital in the world, and it is roughly $250 annually, so it's quite affordable. And we actually distribute this product currently in multiple geographies, Europe, Asia, China, and some African countries. Yeah.
Sam?
Perfect. Sam Hodges, co-founder and CEO of Vouch. Vouch is a de novo program manager focused on commercial lines insurance products. We will be launching imminently, so if you look us up, there's not much there yet because we're still in stealth, but excited to talk a little bit more about what we're doing. And the core of it is we think there's an opportunity to build a really interesting provider of insurance for high growth companies, particularly those in the technology, life sciences, and consumer sectors.
They've switched the order. That's Igor, not Kai, but Igor, go ahead, please. Yeah.
Hello. I'm Igor Mascarenhas, co-founder and CEO at Pier. We are a Brazilian insurtech selling smartphone insurance, but we control everything by the underwriting to claims. And now we have like 6% of loss ratio in our process, and we are growing 20% per month with higher NPS. We believe that we can change the relationship between people and insurance service with great services. Okay.
My name is Kai, and I have a company, TrueLink, that does financial services broadly for people with caregivers. So parents with Alzheimer's, people suffering from addiction or in the recovery process, cognitive impairment more broadly, mental health, special needs. And the thing that all of these people have in common is a relationship with family members or professionals who help them manage money or make wise financial decisions. And that group has become a distribution channel for us. And so we do banking and investment today and are likely to launch credit and insurance products next year.
Thanks, everyone. I'm Karthik, Reddy, co-founder and managing partner at Blume Ventures. We are one of India's leading pre-Series A kind of investors. We do seed and pre-Series A. We also have a bunch of exposure which looks like what my panelists do, but back in India, in companies like Turtlemint, Zopper, Servify. We, this year, will close a $100 million fund, and for the first time, will be a little over $200 million under management. That's who we are. I think for us, when we look at least from my experience, when we look at the Indian market, which is very different from the American market, and similar to, let's say, the Brazilian market, I think we're grappling with what's the edge that the nouveau insurer has over traditional insurers, and their legacy large, behemoths in the industry. And I'm trying to understand from each of your categories that you chose to go after, each of the markets that you chose to go after. Is it distribution? Is it data? What's your edge that gives you an ability to disrupt the traditional large players? And I think it'll be enlightening for the audience to see why is the market open for any of you to come and win that market. It's that segment.
Should I say?
Yes, please. And everyone, because they're very different businesses, very different geographies. So I think each one of you will bring a very unique perspective.
Yeah, so actually we work very closely with the big insurance companies around the world to distribute our own insurance product. So they basically add our product on top of their existing products and bundle it and sell it. And we work with Akko and Turtle Mint in India, but we also work with Samsung Fire and Marine in South Korea. We work with Pingyan in China. So one thing that, like besides, of course, they are very slow. That is, I guess, the nature of it. But also in terms of, we use data much more. But especially because it is healthcare data, and this is currently a topic for us that is both an advantage and a challenge, because we see different kinds of data in different countries around the world. So in Europe, it is very challenging actually at this stage to get more and more data, whereas in China, we are shocked with the amount of data we are able to get. What we do better than obviously the traditional insurance companies is that we have different profiles of patients, and we have algorithms that basically come up with the pricing of the product much faster and much better than existing insurance companies. But of course, given that there are different regulations around data privacy or data itself in different countries, this makes it more challenging. So I'm not saying obviously that we should get all the data, but I think it would really help if we had basically a global regulation around it rather than market by market. But to your question, it is generally building algorithms and coming up with faster and better pricing.
It's fascinating to see that that continues to be a differentiator, I think, because of the sources of data and the speed at which data is available in an industry which otherwise actually relied on data to pretty much build its entire science in some sense, much earlier than most other industries, I would argue.
Yeah, definitely. Definitely.
Sam, your views?
Perfect. Well, you mentioned distribution and data, and that's certainly how we think about it. We think one of the main problems in commercial insurance is right now the shopping experience is very disaggregated and it's very product-oriented as opposed to being very company-oriented. And so what we're doing is actually pulling together different lines of coverage, building bundles that are specific to particular types of companies at particular moments in their growth, and then also making sure we're there, in effect, at the point of need. Because unlike something like auto insurance or homeowner insurance where you're going to carry it no matter what, in commercial lines, almost always there's an event that triggers the requirement for insurance. And if we can actually be deeply embedded around that event, we think that's a very powerful way to meet our customer where they are and ensure the coverage they have is actually what they need.
When we see insurance, we see three big opportunities. The first one is distribution. You can use the internet to create a smooth process and to sell it to the consumer. It's a great opportunity. The second one is use tech and AI to automatize the process, mainly underwriting and claim process, and reduce G&A costs. But the main opportunity for us is use the data to reduce loss ratio, to collect better information, to analyze your product and your clients, and reduce the risk exposure of the customers and reduce loss ratio. For us, data is the most important part to create a new wave of insurtech.
I guess my observation is that it's very tough to do distribution innovation and product innovation separately, that your distribution channel has to drive what the product is, and a new product may open a new distribution channel. And I think that's a broad observation. For us specifically, by winning the trust of elder law attorneys who have collectively 6 million clients, rehab centers who have 2.4 million people check into rehab every year, geriatric care managers, 5 million people meet with a geriatric care manager every year. And in each case, because we understand their clients' needs better and have earned their trust, they can say, here is an elder law attorney is writing a trust for a child with special needs. They can say, we know TrueLink, and here's the type of life insurance that you should assign to that trust, and it's built to meet certain asset rules or trust laws in each state or whatever, and we've built it carefully in order to do that. And I think that there's an ability to find both a product and a channel that is so unique to startups relative to an incumbent, where they, if you have a sales team of 60,000, you're really not going to be like, hey, have we thought about this other thing in a way that a startup really can.
Igor, you want to add something?
This is a very important point, because when we think about distribution, it's only about selling by the internet. But we have to change the product. We have to simplify. The product is very common. Digital brokers have to fill in 15 variables to pricing our product. So to really capture the opportunity in distribution, you have to change the product to create a simple one to selling by the internet.
So the other dimension we evaluate insurtech is, all of what you've said, if I can summarize, basically insurance is one of those products which is not necessarily a very easy pull product. It's a lot more of a push product. No one expects or hopes that bad things happen. Of course, there are fearful set of people in society, but otherwise you don't want to be thinking something bad will happen at every event in your life, right? And to your point, I think unless you simplify the purchase, bundle it, lower the cost, ease the transaction of both buying and claims, you really can't grow the market, grow the opportunity. In that context, for both Kai and Sam, operating in the United States market, where you feel like on every line of business there are, you're overinsured, or there's very large legacy players. How do you view, the differentiation between, or how do you view the opportunities? Are expanding the market or solving for something much better versus in emerging markets, at least in India, I can tell you that I think insurance penetration in most categories other than, let's say, motor, et cetera, is all low single digits across the board. Anything which is not mandated by the government is low single digits. It's seen as a luxury as opposed to a daily, thought habit per se. So very different sets of opportunities, and your insights from your markets where you distribute would be great for the audience again to hear. In terms of where are those niches, not necessarily exactly in what you do, but where are the opportunity sets in each of your relative markets?
Sure. I'm happy to start. I mean, the way we think about this is ultimately you have to identify seams that are big enough to get going where risk is either underserved or really wildly mispriced. And we've identified high growth businesses as being one of those categories where the traditional insurance distribution chain doesn't do a particularly good job in the early days, because honestly the premium per unit is too small for brokers to really spend time or energy. And same thing for the direct writers, who tend to think about even high growth enterprises as being small businesses. And so the questions being asked, the way the experience actually works, just is really misapplied. Moreover, we think by taking a really deep vertical focus within commercial, there are ways that you can actually really get a much more textured view onto risk. And so one of the things we've built out is a much more detailed risk framework where we can really subclassify particular categories of casualty or liability risk. And we think for better risks, actually underprice where the market is, and for businesses that actually are riskier, well, eventually adverse select them out of our pool by making sure that the price that they're receiving if they get a quote is higher. And that's something where if you were reliant on a traditional brokered model, you simply could not do because you don't have control over that pricing decision.
Yeah, it's interesting because you said that nobody wants the thing that they're buying insurance for, and annuities is the counterexample, right? That everybody wants a long life, and very few people have planned for outliving their assets. And yet that's also an extremely underpenetrated category. If you think about the level of longevity risk that people are willing to accept in the United States, and the number of people who haven't even thought about addressing their longevity risk, and yet that's also, it's almost by definition a product that is sold rather than bought. That nobody is like, I want an annuity to manage my longevity risk. I think a lot of that is actually comes back to the sort of pricing and tailoring that we've all been talking about, that if you can build a product that really, really fits a market. So for us, for example, we talk a lot to parents of kids with special needs. And again, I love this example, right? That if you're planning to save money for your child to live on after you're dead, but haven't saved that money yet, then accidental death or disability insurance is a really, really good product. But nobody is there in that attorney's office when you're rewriting your will, saying, "Hey, for it's like $20 a month," right? Because nobody has that has the budget to advertise that for the cost that it would do. And so it's you have to both build that product that seems affordable and well tailored, and then also figure out how to be in there in the point of making the decision.
And at one level, the massive levels of penetration can actually keep getting these costs lower and lower. I mean,
Exactly.
Ugur's product of $250 a year for terminal or serious illnesses is everybody should be getting it. at some level, is how it feels. But and to deliver that at a price point which is unprecedented suddenly just creates a much larger base. I don't think the analogy that I can think of is in. I'll just give you a little bit of an analogy. So, as data prices in India on telecom. The telecom guys milk the top 1-2% of the audience and charges $10, $15, $20. And then this new guy comes in, Reliance, and starts pricing at $3 a month. And suddenly the base goes from 150, 200 million to 600 million. And so suddenly you have an explosion in opportunity sets by just enabling more people to be on the right product. And so I feel that's what we're waiting for, at least to see in emerging markets. Both Igor, Ugur, you want to add what have been your experiences in seeing distribution go to emerging markets at a much faster pace?
Definitely. So we started actually distributing our insurance product in the UK first. We were distributing to corporates directly who would buy it for their employees as a benefit. And then mainland Europe. And then we actually thought about going, and we raised 20 million euros so far from Axel Partners. We had Louis Vuitton, Arnault family. And we thought about going to US markets, and we analyzed it, and we realized that the regulation in the US it is not, one state is not the problem, but if you want to reach a certain size, of course, we were really trying to grow massively, and we were comparing US with China, and we thought actually we should go to China instead of US, mainly because of the fact that the regulation among different states is quite complicated, and you have a massive market in China with just one market, one regulation. Of course, it has its own set of challenges. But as you mentioned, we are currently partnering with Ping Yan, who has 550 million lives under management. And that is why we are trying to make the product pricing so critical, a mass market product that millions and millions of people can get this. And of course, there's a social value of it as well. Like, we want quality healthcare to be accessible by everybody, not just top 2% of the world population.
Insurance Brazil is completely underpenetrated. It's only 3.8% of the GDP. And there's several things about mindset that people don't want to buy through insurance. And we try to change that with a great product. We only sell through the internet, through the direct-to-consumer. And our main channel is referral program. It's incredible. But we deliver a great experience. For instance, our record is after 5 minutes, the field claim, the person receives the money. Oh. So after this kind of experience, the people try to buy, and today 40% of our customers never have bought our insurance before. So we really try to create a great product, selling direct to consumer, and change the experience. And this experience creates a referral program that grows a lot. So it's how we try to enter in the market. It's so difficult, but we try.
The classic question that every internet or digital disruptor gets, I mean, do you work with the incumbents? Do you try to, build bigger than them? Are you a threat? How do each of your markets sort of perceive you as, I know you've talked about partnerships, Ugur, but like, are they enablers, or they tend to block? They tend to be, as legacy players also tend to have a little bit more of a control over regulators. They definitely play a role in figuring out how easily and quickly regulations open up in each market. And so what do you sense for each one of yourselves? I mean, do you see yourselves as partners to everyone, to the legacy players, or eventually disrupt them, eventually get bought by them, or even better, buy them?
In our case, actually, we see them as great partners. We see them complementary. We believe they have weaknesses, but they also have a very big strength. They have a massive distribution power. And we basically started working with them, providing them a service, managing their claims, and we guaranteed them two things, actually. One, if you let us manage your claims, you will actually save much more and the cost will be lower for you. And secondly, your patients will be much happier. So the weakness they have is traditional insurance companies have an NPS score of -5 to +5. Like this is disaster, I think. And we have an NPS score of 69. So therefore, like this is how complementary we are. And in the long term as well, we don't see them actually as competitors that much from my point of view for my company, because we believe that business will continue, and with their data we were able to price our insurance products so well that it actually helps everybody, because in the end these insurance companies are also distributing our product and generating more premium from their own customers.
I mean, I guess I'd start with the glib observation that in the long run, if we're successful, we're all competitors, right? And we're all competing with Amazon and whomever else. But the reality is in the near term, particularly if you have a really focused approach to a particular underserved segment, it's much better to partner with incumbents. And I think that's particularly true for us. We're working not only with a carrier partner, but also a reinsurance partner to ensure that the programs we're launching make sense, are adequately underwritten, that are in full compliance with all the state laws in the states where we're filing. And obviously, if we're successful, we could be threatening to some existing brokers or other MGUs, potentially even some carriers, but that is going to be a small subset of the overall insurance ecosystem, which is obviously very large and very fragmented.
In our case, it's a little bit different. We have partners, sure, but we have several competitors that try to use it legally to stop our operation. We receive several processes, and all the time you have to talk with the regulator that you are compliant, you have to talk with brokers that you are compliant, you have to talk with other carriers that you are compliant. So for us, we have a partnership. It's very important to be compliant, create partnerships with the insurance and reinsurance companies, but we really can see the competitors using the legal and the regulators to try to break our company. It's true.
So I would say there's probably two roles that, so for us, we typically don't initially build all the way down to the metal, right? We're not a bank, we're not a custodian, we're not a broker, we're not a carrier. As we enter reverse mortgages, we're going to sell the paper through rather than hold it on our own books, obviously. So there's sort of like the ticket to the party aspect that the incumbents play. I don't know if we take the attitude of either disrupt. We think of ourselves as building an incumbent.
Sure.
And that thinking about like USAA or TIA. Or American Express for business travelers, First Republic for the very wealthy, SoFi for yuppies. You see you see a real model of vertically segmented financial services providers, you wonder if TIA is sort of like shaking their fist at Fidelity, being like, we are going to disrupt you, we're going to steal your university professor customers. It's just, you're sort of in your own world, and we do steal our customers from Merrill Lynch or from Wells Fargo or whoever, but I think of it almost as totally separate lanes, and we sort of just over time got confidence that our lane was plenty big enough, right? That you look at TIA or USAA with respectively 5.5 million members and 11 million members, and they're each twice the size of Visa, right? You just imagine being Visa thinking like,
sure.
Oh gosh, I wish I'd done something that could be big, right?
Yeah.
We're only processing credit card transactions. We could have done financial services for college professors.
Fair point. So maybe one round of questions again for each of you on what's the ambition? I mean, what personally motivates each one of you to be in these, to have picked something like the specific area of insurance. Some of you are just getting started. Sam's just getting started. Kai's been doing this for a long time. You found either a certain geography or a certain product. Is the ambition limited to becoming the best in that, or becoming much larger? And then alongside that, the question that insurtech, there was a surge of capital. A bunch of companies have been funded. It seems like the consolidation has begun to happen, with large companies getting more and more capital. is there room to continue innovating? What are you hearing from the VCs that you talk to? Do you have enough capital to build to that ambition that each one of you have? So any of you can start, but I'd love to hear that from each one of you.
I'm happy to start. I guess I'd start by saying one of the reasons I'm motivated to build this business is I've had to go and get insurance lots of times over the years, and it's oftentimes a very painful and slow experience. And oftentimes that actually really presents a delay in doing something else in the business that I need to do, be it raise a financing, enter into an enterprise agreement, take out real estate, whatever it is. And so our view with Vouch, by serving entrepreneurs and the companies we're building, we're just making them better businesses. And we're providing tools that will actually help them improve the riskiness of their company and allow them to focus on what they should be focused on, which is building their product and scaling their customer base. If we're successful in doing that, tech P&C globally is a $60 billion a year opportunity. If you layer in consumer and healthcare, it's about $150 billion opportunity. We think there are ancillary personal lines opportunities for the entrepreneurs and people around the businesses. So our hope is that on a 10, 15, 20-year basis, we can be a major player in that category and have a range of different insurance offerings that are very specific to the verticalized needs in each of those subsegments.
Happy to speak to for me in such an interesting niche. It was actually personal experiences in my family that my mom was taking care of my grandmother who had Alzheimer's and basically couldn't find a bank that would support her needs, and it was this sort of just surprisingly difficult process. And know-it-all that I am, I'm like, oh look, she's not the first person that has Alzheimer's, call the bank. And eventually my mom was like, okay, if there's a bank that can serve people with Alzheimer's, you find it. And sort of, oh my God, there's this 11 million person population in America that has no access to banking in a way that can support their independence. And it's both about handling money, but also the independence that comes with money, right? So for many of our special needs customers, it's the first time they've handled money on their own. And the empowering experience of having your money right is just so valuable. In terms of the funding market, we launched our debit card the sort of year after it became clear that Simple was not going to be that good, and Final was not going to be that good, and Coin was not going to be that good, and Plastic was not going to be that good, and Klinkle had failed a couple years before, and Swipe was just sort of like starting to run into troubles, and so we got in right when everybody said, this is terrible, and built it up to cash flow positive where everyone had failed, and then launched a robo-advisor the year that everyone became certain that robo-advisors had no viable business model, and built that one up to cash flow positive also. I think we're the only cash flow positive robo-advisor startup. And then, so if we launch an insurance product next year, you guys are all, you're screwed.
It's fantastic.
So maybe just quickly from our side, we have a good understanding of the treatment costs across different hospitals around the world. And if you get a type of cancer and you want to get treated in the best hospital in Johns Hopkins or Cleveland or Mayo, you would end up paying $150,000 minimum. And we don't think that 95% of the world population can afford this. So that was actually our starting point. And our initial goal is obviously to make at least the middle class market in emerging countries able to afford it, but hopefully we can achieve more in the future.
Fantastic.
If you see the financial services, payments was completely disrupted, and now we can see banking are disrupted, and I really believe the insurance will be the next one. It's a huge marketing, and it's a huge opportunity, but maybe the most beautiful thing is that insurance help people. All the time, if the people has a problem, insurance pay for them. And the people hate insurance. This lack of a relationship for us is the huge opportunity. The people really like and love insurance. Yesterday was amazing for us. Our first time was the customer asked, will you marry me? Oh, it's incredible. And we received several lovers, loved messages, and for us, this is very beautiful in this sector.
It's a great note to take a pause, and we've experienced the same with our tiny insurance portfolio in India. we think a couple of them are going to become massively scaled and massively profitable, to your point. I think if we build carefully in this space, there's this right match between what customers are desperately seeking, what insurance companies are not delivering very efficiently, and with using technology as a distribution platform, using partnerships, and potentially taking a very clever idea from one market and going global, I think there's a huge opportunity to build fantastically large insurance businesses, newer insurance businesses. We have time for questions. This is your few minutes window. I know it's been a long day, but the good news is there's, I think, drinks after this. So if you can get your spirits up and ask these fine gentlemen any questions. Anybody at all? No one likes insurance in the audience too.
I like things better. I would say last panel of the day.
That too. Please.
Thanks. So, Jason Kopolis, Innova Health System. For those of you that are selling insurance, and all of you are, how do you overcome the incumbent data? You know, they have better data systems, they have better ability to determine pricing, all that kind of stuff. So how do you scale your data access?
Anyone? I mean, anyone who wants to go first.
I'm happy to start. So our approach has been, number one, work with partners who have deep expertise in the category you're playing in, hire the right people who also have built really successful, profitable underwriting programs in the categories you're playing in, partner with people who have unique access to proprietary data sets that allow you to get a deep, really granular understanding of the risk that you're actually accepting. And then lastly, honestly, just make sure that your pricing and pace of growth ensure that you have a margin of safety from an underwriting profitability perspective. And when we laid out those details again with the reinsurance partners we're working with, everyone was able to get quite comfortable that it worked within our business plan.
So we've seen two sort of different trends. One is you're tackling things like extended warranty for mobile phones or underwriting anything, screen breakage. These are not things which traditional insurers basically have much of an advantage over you in the first place. And then secondly, you're basically have the ability to create really micro level insurance and penetrate new markets where they don't have a data advantage over you. I mean, Ugur's model is similar, right? I mean, you don't have a global coverage of critical illnesses being offered at the price points that you have. And so I think we've seen in emerging markets at least, you can't price something at a ridiculously high level and expect more than 5-10% of your audience to even be able to afford it. So you break down these things into cost points where there's no chance they can actually build in for those markets. Any other questions? Carlos?
Thank you for the panel. Just curious, I would imagine incumbents can use regulatory bodies to also slow your growth and entrance into a market. So how do you deal with the regulatory game to be able to access a market?
I can answer this question actually. So that's why we work with them to avoid that. But now, for example, maybe Brexit is a good example in our case because now we have the 2 of every license. Because before we could just rely on the license in the UK for all Europe. Now that is changing, most likely, hopefully not, but most likely. And that means that for mainland Europe, we need to get all the licenses again. But to your question, in remote countries, we actually use their licenses or their regulatory advantages.
Yes, please. Kai?
Yeah. I think there are obviously regulatory advantages to being an incumbent, but I think that there are very often ways that a startup can do something that that an incumbent is just sort of not going to do, and we found that in especially new product development. For example, writing a limited durable financial power of attorney into the terms of service of a credit card agreement, right? There's no rule that says you can't. There's nothing even complex about it. But sort of figuring out how to, all our first 10,000 customers all had Alzheimer's, right? And you say, oh, well, that's got to be really interesting from a customer consent perspective. Are they even signing your terms of service? Who's signing it on their behalf? What is it? What does it even mean when your customer signs a credit card receipt if you know they have Alzheimer's, right? And being more nimble in thinking critically about those problems and in bridging gaps among disciplines. So bringing in special needs and elder law attorneys along with financial services attorneys. I think we're pretty consistently able to build a product that other people can't build. And I think that's in part because we're a startup and are thinking harder about regulatory stuff.
You can catch these gentlemen after this. Thanks for being wonderful panelists. A round of applause for the last panel of today.